What's good? Welcome to my YouTube channel. I've never made a YouTube video. I don't know how to make a YouTube video, but we're just gonna get the ball rolling. Get right into it. So, a little bit about myself. My name's Kyle. I'm 22 years old. I'm an ICT trader. I really just trade inverse fair value gaps and liquidity sweeps. But yeah, I've been trading for like 3 or 4 years. I unfortunately found success a lot slower than a lot of people, which is part of why I wanted to make this YouTube channel, to tell you guys that like it is okay if your progress is slower than what you see online. A lot of people getting into trading, especially lately, like I've noticed trading's becoming a lot more mainstream. It's kind of like the new drop shipping or the new like whatever it may be. It's getting super mainstream, and a lot of people kind of lose sight of what actual day trading is and what it's like to be an actual day trader. Especially for the new guys coming into it. You know, you're seeing these 40, 50K days, six-figure months, like seven-figure months all over social media. It's very easy to lose sight of real numbers of what it looks like to really like get yourself from this point to that point. You know, those guys are famous. They have a big following on social media. They're pulling those big numbers for a reason. To the guys that are starting out, the guys and girls that are starting out, you guys are not going to hit those numbers off the bat. And it is okay that you won't. You know, that's why I'm making this YouTube channel to show you that it is okay to move at your own pace. You know, you don't have to be on track with everybody that's making five, six, 7,000, $8 or $8,000 a day. I don't have 30 accounts to trade, and that's perfectly fine with me. You know, it's it's so easy to compare yourself to those that are just genuinely crushing it in the market. And you know, if you're over here, you know, making three, four, 500 bucks a day, it's easy to see that as, you know, you're not crushing it. Like you're behind. You know, you're not. You know, you need to be doing more. You don't stop comparing yourself to those people. But yeah, that's it's. I'm kind of making this YouTube channel just to really stress the fact that it is okay to not be light years ahead of, you know, where you are now and where you think you should be. You know, don't compare yourself to the guys that you see on social media. They're big on social media for a reason. They've been doing this for a while. You haven't. You're not that guy. So without further ado, I guess let's go ahead and get into it. This is how I made for 390 bucks trading NQ this morning. I just went for the winning days on my top step accounts. You can see 189.54, 189.54, so like 390 bucks, 400 bucks, whatever it may be. Just try to stack up the winning days. I'm already eligible for a payout, but I have no issue stacking up winning days. Even if I'm already eligible, these accounts are kind of like right around break even. November was a rough month, or I'm sorry, October was a rough month. So really just trying to get my accounts built back up from that. But yeah, without further ado, let's get into it. So I took shorts today. Now, typically, I want to say this. I know that today was a tricky day in the market, like right at open. More often than not, if I see market dump 60 points, like right at open, and then rally 160 points, that is not something that I'm going to step in between. That's just not a war that I want to get involved in. But I had a really strong draw. I had a lot of conviction in these lows down here getting swept today. Um, I obviously didn't trade down to those lows. That's, you know, my job as a trader is to just get my piece of the pie and get out in one piece. And that's exactly what I did today. So getting into the day, my bias came from this daily gap up here that we rebalanced to yesterday. I wanted to see continued delivery lower from this daily gap right here. And I know that we had, I think we swept out like some minor lows after that daily gap. Like you could see, like we had swept out these coming into the morning today, but what we did was we left relative equal lows at like London Asia session, and then right here, this was my draw in the morning. 9:30 open. What you can see is we dumped it open, came down here into this super discounted 15-minute gap. This was at like the bottom of the range right here. So if I draw like this little box right here, you can see that this 15-minute gap right here, this was like the most discounted gap in the leg. We had nowhere to rebalance to on the higher time frames. We didn't have any hourly gaps. We disrespected this one. We didn't have any 4-hour gaps higher or lower. So this 15-minute gap was the only area for price to rebalance. I'm not gonna lie, if for me personally, I this super discounted 15-minute gap, this is not going to make me bullish. I was super bearish on the day, like I said, from that daily gap. But when we did rebalance into this 15-minute gap, we left some super nice relative equal lows. At open, what happened if I wish I had bar replay mode, but I'm on Project X, so I don't. But you can see coming into open, like I said, we left these relative equal lows right here. I love targeting 930 lows for reversal plays, especially if the draw is in favor of that. And today for me, it absolutely was. I was like I said, I was bearish down to those October lows. I wanted to see lower today, and that's exactly what I saw. Um, so today was a little tricky. We didn't really typically what I like to look for is a sweep of a major like liquidity pool, and if not a rebalance into a higher time frame gap. But like I said, we didn't have any higher time frame gaps to rebalance into, so I took this for what it was. We had all this pre-market low resistance liquidity. We had some minor buy side up here. I don't think, yeah, we didn't sweep out these, but we had some minor low resistance, some good low resistance. We had a lot of low resistance right here. I took this as a perfect sweep. This was perfectly fine to me. And the reason why, like I said, is because we did not have any higher time frame gaps to rebalance to. There was nowhere for price to rebalance to. So I was using the highest time frame possible, which was the 15-minute. We swept out all this low resistance. After sweeping out all of this low resistance, if you go to the 15-minute, like I said, we had no gaps. This hourly was mitigated. This high to me was protected because during what was this? During London session, that in between like London and Asia, um, London session came up and swept out these lows right or this high right here. After sweeping this out inside of the hourly gap, to me personally, there's no reason for us to continue to go higher. If we were to go higher, we would have continued higher, and then like we would have sought out buy side all the way up here. But we swept out this high and in this hourly gap and immediately started displacing lower. We didn't really deliver anywhere until after the fact, until like after I was out of the trade. So I wanted to see delivery lower from here. I was just expecting continuation. So if I go to the 15-minute, what I saw was we had this 15-minute bearish order block sitting up here. Like I said, we didn't have anything on the hourly or the 4 hour. We didn't have any fair value gaps or anything, which is really all I look at. I don't look at order blocks, but I noticed this. This was good enough for me to form my kind of like top down analysis. This was my high time frame um, PD array was this 15-minute order block. So coming into open, we left these relative equal lows right here inside of that super discounted 15-minute gap. I am super bearish down at these lows. I don't want to see higher. I don't want to see anything. All I want to see is my entry confirmation to take down to these lows. This was A plus to me. So what I noticed was coming into the morning, or not coming into the morning, like right after open, after we got this crazy rally. So we dumped down there at 73 points, and then we just immediately rallied 160 points after rebalancing into that fair value gap, leaving this super nice low right here, and then this no wick candle. This no wick candle to me, this devil's mark. I was super bearish. It's just everything that I was seeing this morning was adding on to my bearish bias. So I was genuinely just waiting for any entry that I could find to take lower. Um, so this first presented gap, we come down here into the 15-minute gap, we immediately rally higher. So what I'm looking at is this first presented gap right here after sweeping out this low resistance liquidity and tapping the 15-minute order block. We left this first presented gap. The second we inverse this, I was in. It's really as simple as that. I don't need to see a lot. I just need to see a liquidity sweep, price tapping into a higher time frame imbalance. I usually trade reversals, so a higher time frame imbalance in the opposing direction or in the supporting direction. Um, and then I just look for my entry trigger, which is an inverse for value gap. I take it's similar to Patrick and Blake's model. I look for the highest time frame inversion, and it just so happened to be that it was the 1 minute first presented gap that was the highest time frame inversion. So that's exactly what I took. I will say today was very tricky. I don't know why we were moving so crazy on a no news Tuesday morning. Didn't really make sense to me. But like I said, I don't typically get involved in this, but today I was super. I had a lot of conviction in my bearish bias. Um, so once we got the inverse of the first presented gap, my eyes were entirely on these lows, and then I wanted to see London low get swept, so I'll leave that there just for the sake of the video. Um, but what happened was when I once we inversed this first presented gap, I just limited this. This stop already was 52 points. I only took this with 2 micros. I usually risk between 0.4 0.5% of my 50Ks. So this was plenty of risk for me. I did not feel comfortable leaving my stop all the way up there. That's 95 points. That is genuinely fried. I would have just rather sat out. So I left my stop at the body right here, at the candle body right here, just because we had this 15-minute order block, and then we had this 1 minute gap, and then we had this inverse. So in all honesty, like if price wanted to rip through this gap, I wouldn't have wanted to be in the trade anyways. I would have expected for me to be wrong and for us to trade up into this hourly gap and then take out that high and continue higher. So I put my stop there. I entered in 2 micros right here, and all I'm looking for is right here. I was looking for these relative equal lows, so I didn't go break even on this just because I could have. We left this swing low right here. This is such a scuffed RR. I mean, a point four R. That is not worth me going break even on a day that's moving as crazy as this with such conviction in my draw. So I ended up just I didn't go break even until I took profit. So I peeled off one of my micros down here. It was like 80 points. This candle printed pretty quick, so it was it would have been, yeah. I think I was targeting like down here. I think I got filled like somewhere down here because I mean I made like 190. I don't know what just happened. But I was targeting down here, so I guess I got filled right there. I let I milk my take profits. I usually market exit them. I don't do limits. So I milked that for the 190. And then I went break even. I would have expected continued delivery down lower to London. I would have expected the flush. I didn't really see a reason for price to want to rebalance from this one, and this gap. That didn't make sense to me that we inversed all of those gaps and then ran lower. So I was totally fine with the break even. I actually did expect this to go higher after I saw this candle right here. Um, Pretty unfortunate in the fact that it's this break even me by like a tick and then completely just dumped to my draw. But like I said, I'm here to get my piece of the pie, and that's all I'm here to get, and that's exactly what I did today. And that's all I need. So yeah, I mean, pretty easy trade. There's not really a whole lot to my strategy. It's really just the inverse fair value gaps and after liquidity sweep. So I found my entry trigger today. I had my bias and I executed on it. That's my job. That's what I get paid to do. Yeah, I mean, that's pretty much it. I don't really know what else to say. I hope you enjoyed this. Like I said, this YouTube channel is going to be big about like not comparing yourself to the guys that are just really making it. So I hope that you took something away from this video and realize that it is okay to not make $5,000 in a day. Perfectly okay. Being a realistic like 22-year-old day trader. I'm not saying be realistic. I hate that saying, but it's also like with trading because it is such a solo and tough journey. Like you honestly kind of have to be realistic in a sense that you can't get ahead of yourself. Like move with where you are. It's I'm big on bridging the gap between the you now and the you need to be. But as you're bridging that gap, it's really just about doing what you know you have to do, doing so in a manner of which you're comfortable in doing, and just executing. Your time will come when you're going to be making all this money. You're renting prop firms, you're making 20K a month. Your time will come for that, but until you're at that point, take what you can get and get off the charts. Just stack your paper now and you'll get to that point. Like if you continue doing what you have to do, you will get to that point. So I hope that you took something away from this video. I hope that this recap was good and that you learned something. And I will see you guys tomorrow. Peace.